Hey everybody, I'm Chris Evans. I am the principal broker here at our little family-owned realty company in Marietta, Georgia, Select Realty. I'm also a realtor. I do help people buy and sell homes throughout the year. But today what I wanted to talk about is what came out in the news. All right, so we've all had a crazy real estate year. We've all had a crazy real estate couple of years, actually. And what we're coming into right now is a period of time where our economic data for the country is showing us in such a negative light that we're starting to see jobs evaporating. We're seeing some uptick in the unemployment numbers. We just got the revision this week from the BLS, the Bureau of Labor Statistics, saying that our job growth from March of 22 to March of 23 has now been revised downward by over 800,000 jobs. They're revising it downward at like 60,000 jobs per month for the year. 70,000 jobs per month for the year. And now, with all of this data and inflation finally starting to cool, the Fed met this week at Jackson Hole, Wyoming for their annual conference. Powell came out today and says the time for cuts is here. So what does that mean for you? Well, first off, over the last couple of weeks, we've seen dips in interest rates for mortgages coming. Over the last few weeks, we've gone from the high sevens to now we've kind of been comfortably in the sixes. With this news, again, we don't know how much the drop is going to be. There are some people predicting 100 basis points. Some people are predicting 50. I personally think the first drop is going to be somewhere between 25 and 50, with my money on a 25-point drop. If they do a 50-point drop, we're probably going to see subsequent 25-point drops from there on. And these numbers are coming in just at the end of fall. So the real estate market has kind of gone through its natural selling cycle where everybody wants to get in their house and move before the school season starts. Well, surprise, surprise, Georgia has had school in for 23 days as of the recording of this video today, and everybody's here. But there are so many people that have been on the sidelines. They're renting in the school districts where they want to be, and they're going to transact mid-year. They will update as long as they don't have to change school districts. They will transact when rates come down, because over the last 4 years, the average age of your first-time home buyer has pushed back generationally 3 years, from 33 years old to 36 years old. That's the age of the first-time home buyer today. My wife and I bought our first home when we were 21, 22 maybe. It was a long time ago at this point, but buying at that age allowed us to get an investment property that was also a dream vacation property for us in Alaska, to allow us to go and explore the state and take our kids and explore the world. And if we didn't buy that home at 21, 22, we would not have had the financial resources in our mid-30s to acquire that. So the generational pushback of first-time homeowners has caused this massive rift. We're going to have negative repercussions on this in retirement of generations for years to come. And we're not going to see this impact until we get towards the retirement age of millennials, who are smack dab in the category of first-time homebuyer age. Still, when we graduated college, I felt like we were at the start of the first-time homebuyer age. Now, a decade and a half later, we're still at the smack dab of the first-time homebuyer age because that generational shift has happened. So what are we looking at coming up this September? Well, when those rates drop, we're going to start seeing a lot more people come back into the market. Your refis are going to start. If you've bought a house over the last 2 years, you're probably at a position where you might be able to refi already. But after September's rate cuts, you're probably going to be in a much better position to do a refinance and free up some of your cash flow. If you need to refinance, you could do a rate and term. A rate and term finance, you don't take on additional debt. You keep the debt payment the debt amount the same. You're just restructuring the interest rate and the timeline. So it'll reset to a new 30-year, and you're going to lower your payment. Now, trick with that, if you do that refi and you lower that monthly payment, you can keep paying the same amount and pay off that mortgage a heck of a lot faster. So that's one thing to think of. If you're curious about how that debt snowball works, just reach out. I'm happy to run the numbers for you and show you exactly how many years you will shave off your mortgage just by refinancing and then keeping that payment going. By the way, I'm not a loan officer. I don't quote mortgages on rates. I'm not quoting rates. I'm just quoting what housingwire.com is saying for what's happening in rates and what my lenders are telling me. But I used to be a financial advisor, stockbroker, and doing an amortization chart is not rocket surgery. So I'm happy to run those numbers for you and show you what that AM schedule looks like. If you have not purchased a house yet, say you've been on the sideline, you're waiting for rates to come down, you're waiting for the housing to become more affordable before making that jump. Well, now might be a great time to get in the market. Don't wait till the spring. In the spring, all the buyers are going to be back. Rates are going to be lower. Everybody's going to be like running for the hills. We'll get into bidding wars again if the Fed isn't careful about how fast they reduce those rates. So buy today because sellers are still discouraged. Sellers are discouraged because agents have been overlisting their house, overpricing their house, or there's not enough margin in the equity to afford to sell the house for less. Those ones will continue to sit on the market until the value comes back on them. And it becomes more affordable for somebody to acquire that. For the other homes, the ones that are priced right and they're in an in-demand area, they're on and off pretty quickly. They're not lasting. So if you get in today, a lot of sellers are going to be negotiating with you. I just negotiated $25,000 off of a new construction. And if you've never learned about new construction before, it's like telling Walmart to give me, $25 off, a $150 retail thing just for the heck of it. Walmart doesn't do that. It's retail, and that's what new construction is to real estate. So we got $25,000 off of the retail ask for that property, and then we got an additional $14,000 in change for closing costs. What happens there? The seller needed to sell the house, and I had a buyer that could make it happen on certain terms, and we made those terms happen. So if you buy today, you might be able to negotiate a better deal. Lower price, less out-of-pocket expenses. That's going to benefit you in the long run. Keep your cost basis low. If you buy a house at, say you buy a house today at $400,000, and in 6 months that house is going to be, $430,000 because rates have dropped and everybody's in. The payment at the end is going to be more if you wait, because you can buy that house today and then refinance and lower the payment as rates drop. You got to have about at least 6 months of solid payment history before you can refinance again. That's generally the rule. Once you refinance, you're going to have a rate or a payment that's lower than if you were to go out and buy that house that day, because prices would have gone up. As rates drop, prices go up. It's an inverse relationship. When rates go from 6 to 5, you're going to have people that couldn't afford it at 6, but they can afford it at 5. So they're going to come in. But if you can afford it at 6, might be tight, buy it at 6, because you'll buy it at a lower cost basis. In 6 months, you'll refinance $400,000 of principal. In 6 months, if you wait to buy, you're going to buy it at $440,000, $430,000, $450,000, whatever the number is now that rates drop. You're going to buy it at that higher amount, so you're taking on more debt. Your payment is going to be marginally higher than it will be with buying it earlier and then refinancing. The cost on this, it has to make sense. You do math. I will do math for you, with you, to make sure that you understand it. But you've got to go through and understand what your cost is today. And if you can afford the payment comfortably, you're now going to be in a position where the house is a blessing, not a burden. If you can't afford it today, the house is a burden. Don't buy it. Wait until you can afford it. Save up more. Buy some other assets that maybe aren't real estate. Let them appreciate a little bit. Sell those to help you get into the real estate market. If you can't afford, wait. Wait for prices to drop and come in. It'll be a higher purchase price later, but the rate will be lower. If you really want to maximize the market, you buy this fall. I predict we're going to have a way busier than average winter season. We've seen this in the past where we've had tight years on inventory, and when you don't have those inventory levels or your demand is outpacing the supply, we're going to have a very productive September, October, even potentially November and early December. With the way that this market has been backlogged for the last 18 to 24 months, I seriously think we have potential buildup in the market to have sizable buyers throughout the winter. So as we're going through all of this, y'all, I want you to know that we are here for you. If you have questions about real estate, we're happy to answer them. We want to be in your corner. We focus on real estate as a relational business. It's not transactional with us. We're a very small, family-owned, second-generation run company. Celine and I would love to help you buy or sell real estate. If you're out of our territory, we've got about 70 agents throughout the Metro Atlanta area where we would love to get you with an agent who can help you navigate this market. So we're here. We want to assist you. We're happy to answer any of your questions. Just send them in. And until then, we hope you have a fantastic day. Thank you so much for tuning into this video. I hope that this news is going to bring you a little bit of excitement for what we've got. I certainly know I'm a little bit excited, not just for me, but for all of our agents and everybody who's been diligently maintaining these relationships with our customers and clients that have not been ready because of the interest rates. So you bet your bottom dollar we're screaming this from the top of the mountain right now. We want everybody to know the message. Rates are coming down. Powell said it today. We don't know how much, we don't know when, but rates are coming down. We're probably going to see some movement in the markets on Monday, and we'll see some adjusted rates already taking into account the rhetoric from the Fed. So if you have been sitting on the sideline, stop it. Stop it. You're not allowed to sit on the sideline anymore because the game is on. I hope you have a great day. We'll see you soon.